Thank you for landing on my page about finding out about the USDA home loan program in the state of Utah. How do I get a USDA loan and who qualifies for the USDA loan in the state of Utah? We're going to go over some programs and tips and tricks in the process of getting a USDA loan in the state of Utah. This is a great program. Not too many people know about it. If you're not in that area that's approved area, you may not know about it. Realtors may not know about it either, but I want to go through the steps on finding the approved areas for the USDA program in the state of Utah. A couple things on it. It has to be an approved lending area. So here's the state of Utah, and I'm going to go down right down to a street, right down to a city on the approved areas. Anything that's kind of shaded in the state of Utah is not going to be approved in the USDA lending area. So you can see Logan, the greater Salt Lake City area down to Provo, Spanish Fork is not going to be approved. But right here in Payson, which is real close to the metropolitan area of Provo, Orem, and Utah or Salt Lake, you're able, I know places growing down there, you can get a USDA home loan program at no money down. You've got to qualify for it. So the first thing is the home must be an approved lending area. So I'm going to go and show you how to find that lending area. This is a site that I'm going to have the link below for you to find a property and put it in there to make sure that it's an approved. But if you're down in here looking at Dugway or Oak City, Fillmore, then yeah, you're going to be an approved lending area. So the property must be an approved lending area. There's income limits. So right now in the state of Utah, and this was as of June 8th of 2022 as I'm doing this video. So they do change the income limit every June. It seems like that's when they've been coming out, May and June. So you cannot exceed this gross amount, 1 to 4 people in the household. So these are dependents in the household. $103,500, which is healthy. That's a good income amount up to 4 people. 5 people or more, $136,600 in the whole state of Utah. Some states will have different county loan limits. Higher the property value, the higher the income limit's going to be. But right now in every county in Utah is $135,500. Cannot make more than that. Up to 4 individuals in the household, 4 dependents. 5 or more, $136,500. You can make a little bit more in some other counties, up to $153,300. So that's number 2. You cannot exceed the gross qualifying income limits in that particular county. So if you don't exceed that, if you make $200,000 and there's 3 people, you exceed it. You make $125,000 with 4 people, you're going to exceed the income limit. Right now it's $103,500. So that's the second area. The debt to income ratio. They are going to have a lower debt to income ratio than something like a conventional VA or an FHA program. So if you're looking in an area that's approved, I'm directly going to go right to USDA. It's not limited to first-time homebuyers. You can be a first-time homebuyer, and you don't have to be a first-time homebuyer to get the USDA home loan program. So let's find, and I'll watch the video all the way to the end because I want to give you a great tip on how to purchase this on this program. It's a no money down. So you don't have to put any money down for the down payment. If you're purchasing a property in Utah for $300,000, guess what? You're going to finance the $300,000 with the small mortgage insurance, but there's no money down on that. The conventional's minimum is 3%, FHA is 3.5%. So in the state of Utah, 0 money for the down payment. Okay, let's go into how to find the area. Below is going to be this link to take you here. When you click on this link right here is going to take you to. Okay, so this is the link I'm going to have below. It's going to be on the property eligibility. You're going to press accept. And once you press accept, it's going to take you to this page, which is this page that we were on. But it's going to take you to this page. You need to find a property that you're looking at. So I got a property address here that I want to show you what it's going to say when it's an approved area. So I got a property address. So I'm going to press go. This address is located in the eligible area. So that means you got the property that's located in approved USDA lending area. You met the income requirements. There's 3 of you in the household, and you make $95,000. Boom. You got 2 out of the 3, which is the debt to income ratio, and that's where we need to look over your income. Now, if you're looking at a property in a tight area, but you can go all the way down to a street So when you get closer to like St. George, I'm gonna grab an address in St. George for us, and I want to show you what it's going to say when it's not approved. So if you're right down to the street, it says it's not approved, um, and it's not too many cities in Utah. Um, Obviously, it goes by population on these approved areas, but you can go all the way down to the street. So if you're looking at St. George and looking more out to the west, you got some houses here. They're approved. Go all the way down to the street. Look at all these approved areas right outside of St. George to the west of St. George. All this area here is going to be approved. It's the shaded areas. So you can get finite all the way down and go, okay, this street over here, you get off this street, over the next street over is going to be approved, okay, in St. George. So find the area in Utah. This one's not approved, but you can see there's tons of areas that are approved, but granted, a lot of people may not want to live in these remote areas, and it's going to be remote, but as you can see, we go up to 15 and go towards Salt Lake, you're going to see some of these areas like Payson that's real close to Salt Lake, that Selman, Elk Ridge, Benjamin that you can move to that's going to be in the Salt Lake. Go over the mountain there and you can go into Waldsburg and Charleston. You may not want to do that. Sarasota Springs right down over on the other side of the lake there, the dry lake there. But yes, this is a great program. The one good thing about this program is it's great that it's no money down. You meet the income requirements. The credit scores 620. Most lenders want 620, 640 and above. So if you got like a 580, it's going to be very difficult to find a lender that's going to lend on that credit score. But I'd still love to talk to you if you got a credit score in the 500s. So let's work on your credit to get you up to a 620. The company I work for requires a 620. Some require a 640. So 620, you met the area where it's approved, you met the income limits, you met the debt ratio requirement. The other great thing about the USDA, you find a home that's in an approved lending area. Let me grab that property in Hurricane again. That's listed, this one's particularly listed at 425 at the moment. I'm going to put this in. This property is approved. You meet the income requirements. You offer $400,000. The property appraises for $410,000, $415,000. We can use that extra $10,000 to $15,000 and pay your closing cost. That's the only lending program on a purchase that will allow us to finance your closing costs. The property must appraise higher than what the agreed upon purchase price is. Your purchase is at $400,000. This property is listed at $425,000. You offer $400,000. Sellers go fine. It works when it's a buyer's market to say, hey, there's a lot of property inventory on the market. I'm going to offer you a lesser amount. We know it's going to appraise for a higher amount. We can use that freed up equity to finance your closing costs. So you're essentially purchasing a property, no money down, no closing costs if it appraises higher than the purchase price. You're buying it for about $1,000 roughly. The home inspection, which is not required but highly recommended, and an appraisal fee. The appraisal fee will determine on the remoteness of the property. If it's real close to a metropolitan, like this one's close to St. George, there's some appraisers in there that make that drive. They're not going to charge any more than what they typically would charge if it was in a good 10-mile proximity. So the appraisal can cost anywhere between $400 to $1,000, just depending on the remoteness of the property. So you're buying a property for about $1,000, give or take. Home inspection, connect with your realtor. They will know. They'll have a book of home inspectors that they can refer out to you, because we don't need the home inspection report, so we won't have that as lenders. So you must open an escrow. It's called an EMD, earnest money deposit. Talk to your realtor about that. They say, hey, you may open up escrow with $1,000. Great. That $1,000 is not going to go towards a down payment. That $1,000 will go toward the closing costs. If the home appraises for the agreed upon purchase price, you're purchasing it for $400, appraises for $400, we can't finance your closing costs. There's not any freed up equity. So that $1,000 that you put into escrow will get applied towards your closing costs. So the USDA program, how do you get it? Who qualifies for it? As long as you meet the minimum underwriting guidelines, which we got to submit you to the GUS underwriter, the approved underwriter for USDA. First, got to be an approved area. Bottom line, it cannot not be there. It has to be an approved lending area. You cannot exceed the gross income amount on what it is today, and that's not $1 over, 5 cents over. You must meet that maximum required income. If you go over it, you don't qualify. Credit scores. Lenders will have their overlays on the credit scores. Ours is a 620 at the moment. If you have a 600, I can't do anything for you, and it's going to be difficult to find a lender that's going to lend to anything less than a 640 or 620. A lot of lenders don't do the USDA program, but a 620 is what we require as well. And the debt ratio. The debt ratio is tighter than any other program out there. They're tighter than the conventional FHA and VA, which means they're going to have a lower qualifying debt to income ratio. And right now, there's two sets of it, a 29 on the front end or 32, depending on what your credit score is. And that's not 29.5, it's 29 or below. They have some strict guidelines when it comes to the USDA. But if you're looking, you're limited on funds, you're a first-time home buyer, you're not a first-time home buyer. If you're limited on funds, you're looking in an area that the approved home is in for USDA, let's have a conversation, because this is a great program. You can purchase a property. It may not be the exact location you want, but you're buying something and you're owning something on the USDA program. It's for owner-occupied purchases only. It cannot be used for an investment property or second home. It has to be on an owner-occupied purchase. So if you're looking in the state of Utah, limited funds in an area that's outside the metropolitan areas of Salt Lake, I'd love to talk to you about the USDA program, because it's a great, great program. It's a no money purchase down program. And we can finance your closing costs if the value is there, there's enough of it there to finance. So give me a call. All my contact information is below. My name's Nathan Rufty. I'm a licensed mortgage professional in the state of Utah. I'd love to connect with you about the USDA program and explore this program, see if it's right for you. Thank you very much for watching the video, and I look forward to hearing from you.